when put into your tax slabs will tell you your tax liability. I hope you're clear with the flow. All of you understanding, right? So after this, in our final step, there is one more thing that happens. What is it? So here I want you to pick up your income tax return. Yes? So all of you saw serial number 1, gross total income, correct? After that, there is another serial number 2. Tell me, what does it read? It says deductions under chapter 6A. So what are these deductions under chapter 6A? This is the area we save tax. This is the area that the government wants you, that the government has given you a provision to save your tax. So let's discuss what these deductions are. So what do you mean by a deduction? A deduction is something that the government wants you to do. And if you do it, it's allowing you, the government is not taxing that part of your income. For example, if my gross total income is 10 lakh rupees and I am getting a deduction of 2 lakh rupees, then I am paying tax only on 8 lakh, and this 2 lakh, because of the deduction, I am not subjecting it to tax. Okay? Deductions are most of the time mostly an expense by doing which you can save your tax. That amount does not get included in your gross total income. Correct? That is when you will see gross total income minus Angle. Yeah, we were on section 80C. So with me, please note down the section. I'll first quote the provision of the section, and then we will discuss in detail about it and what is the tax you can save, right? So 80C offers us many ways to save tax. And what is the amount 80C is offering us? 80C is offering us 1,50,000 rupees as deduction. So before we start with that, let me tell you, in your income tax return, you have the first page, right? Flip the page, and then you will see the breakup of the chapter 6A deductions. Please look into that. You will see section 80C, 80D. Are you able to see that? No. So that is what we are talking about. So 80C is giving us a lot of ways. Let's discuss one by one. One, life insurance premium. So if you are paying a life insurance premium, whatever amount you are paying, you get that as a deduction. First way. Second way, you can contribute, you can invest in PPF, Public Provident Fund. And when you invest in PPF, the amount you invest, you get as deduction. So all these deductions in all these deductions that you get in 80C, all of them are subject to a maximum limit of 1,50,000. So after your PPF, there is another way. There are a lot of ways. The third way that we are going to discuss is NSC, National Savings Certificate. National Savings Certificate is a product of Post Office of India. So if you want to invest in NSC, get in touch with your post office and invest in NSC. So let me tell you what is the advantage and why you should invest in PPF and NSC. PPF and NSC has a return of up to from 7 to 8%. So it's better than keeping it in your post office. It's better than keeping it in your savings bank, or sometimes even better than FD, correct? So this is the advantage that PPF and NSC are giving us. After this, 80C gives us another provision, another way to save our tax, and that is tuition fee. So what do you mean by tuition fee? Does it mean that the 10th standard tuition I'm paying for? No, that's not the tuition. Tuition here is a recognized educational institution. It can be a preschool, it can be a school, or it can be a college also. So let me explain it to you. When you take a receipt from that school or that educational institution, you will see the word tuition fee. So when you are taking that receipt, ask them, give me an 80C receipt. Take that 80C receipt, and then you can take that in your 80C deduction. So what I want to conclude by saying is, in 80C, this 1,50,000 deduction limit, most people are not using. Check. Go to your income tax return. Check. Check the word 80C. Is the amount there 1,50,000? Very good. If you're not exhausted that limit, then this is a provision that the government is giving you, but you are not utilizing it. And this particular section of 80C is what is giving you the highest deduction amount. So after 80C, we will come to another very important section, 80CCD1B. 80CCD1B. It's not Cafe Coffee Day, it's CCD1B. So what is 80CCD1B? CCD1B is another provision given by the government to us. Another beautiful way that the government wants to tell us, save for your retirement. So what do you mean by this? If I invest in something called National Pension Scheme, NPS, if I invest in NPS, the NPS is going to give you such a nice return. Let me tell you how. So the amount you invest in NPS, you get a deduction, subject to a maximum of 50,000 rupees. So 50,000 rupees, what you invest in your NPS will keep saving over a period of time, and whatever interest you earn, when you withdraw it when you're 60 years old, you get all of that as an exemption, because this is an exempt income. So let me tell you the difference between if I had invested in NPS, or I have not invested in NPS. If I have invested in NPS, that amounts get stored for my retirement. And if I had not, that 50,000 rupees, I would have paid 30% tax on, which means 15,000 rupees I am saving in this very year if I've invested in NPS. Correct? Point number two, what? What is the rate of interest that NPS can give you? NPS can give you anywhere between 12% to 14%, way more than PPF, NSC, FD, or all these savings bank accounts. And this is, I feel, the most nicest way for the government to tell us, invest for your retirement, save for your retirement, and so much of interest what I'm earning, all of that becomes a corpus. And when I'm 60 years old, I get to withdraw all of that corpus, completely exempt. And that time, when I'm 60 years old, I don't have to pay tax on it. Do you know how important this section is? This was recently started in 2016, and a lot of people may not be aware about it. Please go talk to your chartered accountant, talk to your people who help you invest in NSC, NPS, and tell them, because there are various options of NPS. So choose the best one and invest and save for your retirement. So with that, we understood 1,50,000 limit of ATC and 50,000 limit of AT CCD1B. Let's get into another important section, section ATD. ATD has to do with medical insurance. What medical insurance and why should I have medical insurance? See, this is what I believe. In a family, I am dependent on someone or someone is dependent on me. So I feel it is always better to have a medical insurance, and the government itself is asking you to put money and take a medical insurance, and they are ready to give you a deduction for it. How is that? Let's understand. If I have a medical insurance for myself, my spouse, or my children, then the premium that I pay for this medical insurance, up to rupees 25,000, I can claim as deduction. So not only am I getting a medical insurance for myself, I am also getting a tax deduction for it. So if it is for myself, it is 25,000 rupees. Now, if you have your parents and your parents are 60 years old, they are senior citizens, then the health insurance premium that you pay, medical insurance premium that you are paying for them, up to 50,000 rupees, you can get as deduction. What if your parents are less than 60 years? No problem. The maximum limit is 25,000. So 25,000 for yourself and 25,000 for your parents. Both of these amounts you can take as deduction, which means 25 and 25% if your parents are not senior citizens, and 25,000 and 50,000 if your parents are senior citizens. So till now we have understood 1,50,000, 50,000, and another 75,000 of savings of tax. Next, let's take up another section. ATE. What is ATE? ATE has to do with education loan. Let's understand the section. Education loan can be taken for any higher education. So what is higher education? Higher education here is any education pursued after second PU. After second PU, it can be BCom, BBA, MBA, or furthermore. This loan that you take for these education, you can take as a deduction. This loan that you take and the interest you're paying for this loan, you can take as deduction. So what amount can you take? What amount can you take? You can take any amount. There is no upper cap, there is no upper limit on the amount you take and interest you pay. You get the entire amount as an income deduction. So if you are pursuing a further education and you want money for it, go tell your dad, we can take an education loan. Because of that, you get a tax deduction also. So it'll be able to help you to convince him or tell him that how this can be beneficial to you. That's one way of how I see educational loan. Let me tell you another very amazing way of how I see it. I know there are some of you who are sitting here who are like me, who have startup ideas in their mind. So here's the deal. Tell your dad, please give me this loan of so much rupee, whatever he's able to take for you. The interest that he will pay on that loan, he can claim as tax deduction. So he won't mind giving that money to you. and you as a student have 8 years to repay that loan. So take that money from him, start up your business, and in the next 3-4 years, start paying back that money. And that's how I think it's an amazing idea to, if you're looking for funding, investing, or you want money to start you want capital, you want money to start your investment, you want to start your small business. This is how I feel you can take some money and you can accumulate that money and start up the business you have always thought of. That's about our section 80E. Next, we come to section 80 TTA. I hope all of you are writing it down. Section 80 TTA. TTA has to do with savings bank interest. Most of you have savings bank account, correct? So the interest that you are earning on your savings bank account, did you know that you get an income tax deduction for it? Do you get it? I know most of you might be shocked. Yes, you do get a deduction for it. 80 TTA is the section. The amount that you can save here is 10,000 rupees. So if I am earning 5,000 rupees as my interest in savings bank account in this year, then all of that 5,000 rupees I get as deduction, which means I am not paying tax on that. Right? So up to 10,000 rupees is what this section allows us if you are less than 60 years old. Now, what if I am more than 60 years old? I am a senior citizen. Don't I have this benefit? Can I not get this 10,000? No, I'm sorry, sir, you don't. But the government says, don't worry, beta, I have another section for you. And that section is 80TTB. What is 80TTB? 80TTB is applicable only to senior citizens. Senior citizens who have parked their money in FDs, that is fixed deposit, they are earning the interest, correct? So the interest that they are earning on fixed deposits up to rupees 50,000, they can get as an income tax deduction. 50,000. So if you are less than 60 years old, you have TTA, which means 10,000 rupees interest on savings bank account you can get as deduction. And if you are a senior citizen, it is section 80 TTB, where you can get 50,000 deduction on interest earned on fixed deposit. Hope all of you are understanding. All of you are with me? Yes? 80 TTA, TTA, TTB. Now, JJA. What does this section have to do? I'm sure some of you here might have a farm, an estate, an agricultural land, or any place where you are growing a few crops, or you have a farm for yourself, and there is a family living there, and there is some produce that is happening. If that is the case, then this section is for you. What does this section have to offer? This section has to offer something related to biodegradable waste. So you know that in your farm, there is some biodegradable waste that is produced. What do you have to do? Employ a few people over there. Tell them to convert that biodegradable waste into manure. All you have to do is bury it, there are a few processes, do it, and then it becomes a manure. That manure, take it and transfer it to your farm. So you have paid it to them, which means those people are earning profits. That profits which you are earning for yourself get you 100% deduction. Let me repeat again. If you engage in this, or if you engage in this biodegradable waste and converting it to manure, and the profits you are earning from it, you can take that as a deduction. 100% of those profits, you can take them as deduction. That's about 80 JJA. 80 JJAA has to do with business people. If you are a businessman and you have employees in your organization, which I'm sure you do, you have employees in your organization, and the next year you employ another person, you employ a new person into your organization, did you know that the government offers you something? And what is that? That is 80 JJAA. What does JJAA have to offer to you? You employ a new person, you give job to another person, and the salary you pay to him, 30% of that salary, you can claim as deduction. However, conditions apply. What are those conditions? If last year you had 9 employees, then this year it should be 10. If 2 people have left and 1 person has joined, this section will not apply. But however, if you had 9 people last year and this year you have employed one other extra person and now you have 10 people in your organization, the salary you're paying to that 10th person, you can get a 30% reduction on this person's salary. And this is not just for 1 year. This will continue for the next 3 years. So if the 10th employee who has joined, first year, second year, and third year, 30%, 30%, 30%, you are saving 90% of his salary as an income tax deduction for yourself. Now, what if first year I join one employee, the second year I join another employee, third year I join another employee. So in the third year, I have the first employee is 30%, second year employee is 30%, and the third year employee is 30%, which means 30, 30, 30. I am saving almost 90% of the salary which I am giving to these employees. So this has to do with business people. Business people make note. If you are not taking use of this deduction, please make a note. Research about it, talk to your chartered accountant, and get this used in your business. Get this used in your income tax file. And all of these deductions that we've spoken about is going to save that money for you. Now let's understand everything. Let's just revise all of these sections that we've understood. ATC. ATC is insurance. That is our health LIC premium that we've paid, PPF, NSC, tuition fees. Next, we have ATCCD 1B, which is National Pension Scheme, which has to offer us 12 to 14% of interest. And when we withdraw it when you're 60 years old, you get the entire amount exempt. Next, we have ATD, which is about medical insurance. You can take it for yourself and for your parents. If it's for yourself, it's 25,000 rupees. And if it's for your parents, and that parents are more than 60 years old, then they get 50,000 rupees. If they are less than 60 years old, they get 25,000 rupees. So together, this can save almost 75,000 rupees of yours. Next, ATE, educational loan. Educational loan is when you take the education loan, and the interest that you're paying on that loan is completely, all the interest that you pay is complete deduction for you. We have TTA, which is savings bank account. The interest you're earning from savings bank account, you get as deduction up to rupees 10,000. Then you have ATTB, which is offered to senior citizens, which means the interest they are earning from fixed deposit up to rupees 50,000, they are getting as a deduction. JJA, we understood about biodegradable waste. You convert it into manure, and then the profits that they are earning, you get that as a deduction. JJAA, recruitment of new employees. For all the businessmen out there, when you have an actual increase in the number of people in your organization, you are claiming 30% of their salary as a deduction for yourself. ATG. Did we miss out this? ATG. ATG is supposed to do with donations. When you donate to an registered, when you donate to a registered fund, example, National Defense Fund, Swachh Bharat Fund, Clean Ganga Fund, any of these funds when you donate, the amount that you're donating to those funds, you can get as deduction under ATG, which means you are also doing good to the country and getting a tax benefit for it. That amount that you're going to donate, you are getting a tax deduction. After this, I would like to give you one exemption, one exempt income provision, which some of you might know, some of you might not know, most of you might have missed. And what is that? It is called Section 10, subsection 15. What does this have to say? This has to talk about savings, post office savings bank interest. Post office savings bank interest. So the money you have in your post office savings bank and the interest that it's earning for you, that interest will be exempt up to rupees 3,500 rupees. That income which you are earning as an interest from post office savings bank account up to rupees 3,500, you get as an exemption. So with this, we have understood and revised our chapter 6A deductions. And now let's show you some numbers. Let me show you how this can be useful, and let me show you what is the amount of tax you would have saved at the end of this if you have implemented all of these sections. So let's take an example of Mr. TaX. Mr. TaX has a gross total income of 10 lakh rupees, and we'll take the same example of another person with the name X TaX, who has a gross total income of 10 lakh rupees again. So this is the person who had not attended our session, and this is the person who has attended our session and is aware of all these deductions. So let me show you the numbers. From ATC, what is the amount you are saving? You are saving 1.5 lakh. With section ATCCD1B, that is NPS, you are saving 50,000 rupees. And what is with ATD? Medical insurance, 25,000 for yourself and 50,000 for your parents. Then we have education loan. Education loan, say you have taken an education loan of 3 lakh rupees. Then if it is even even has the interest of 10%, then the interest is 30,000. So that entire 30,000 is your deduction, right? So you have 30,000 here. TTA, that is our savings bank, 10,000. TTB, 50,000 for senior citizens. JJA, we won't include this because it is variable, might be applicable to a few people, might not be. So we are only considering these amounts. Now, are you able to see the difference between Mr. TaX and Mr. X TaX? What is the amount of deductions he is taking? 1.5 lakh, 50,000, 2.75 lakh, 3 lakh 5,000, 3 lakh 15,000. What is the amount? Mr. X TaX has got a deduction of 3,15,000 rupees, which Mr. TaX would have paid tax on. With this, we have understood the deductions of Chapter 6A, how much money it can save for us, and this is the amount which you and I can save, guys. Now tell me, pick up your income tax return. Look at the deductions under Chapter 6A. What is the amount? This is what it can be. Imagine if this was the amount in your this was the amount in your Chapter 6A deductions. Wouldn't you have saved a lot of tax? Yes. With this, guys, let's take a break for 5 minutes. It's what time now? Now it is 5:38. Let's meet back at 5:43. Don't leave the meeting. Don't mute yourself. Don't turn off the video. Stay there. In 5 minutes, we'll be back. You are on X TaX. Welcome back. We are on TaX. Let's get into our second segment. And here in this segment, we will take up few scenarios and understand in these scenarios how we can save tax. Let's start with first, salary. So most of you would know salary is a place, the income that you receive as salary, 50,000 rupees of that you can take that as a standard deduction. 50,000 rupees of your salary income for the year will be your standard deduction. Only after removing that standard deduction, the amount gets subject to tax. So how can we use this for our advantage? Here, let's take an example. You have a business and you have a few relatives of yours who are coming to help you in your business. Now, when they're helping you, just because it is the family's money, you don't pay them anything because they all are part of the same family, they're part of the same business. But I will tell you another provision by which you can save tax. What is that? So, whoever is helping you in your business, you can divert some part of the money to them as salary. So, because they are working for your organization, for your business, you will pay them salary. And in their books, when 50,000 rupees will appear, because of the standard deduction, they don't pay tax on that 50,000. That is reduced from their gross total, that is reduced from their salary income. And here in your business, that 50,000 rupees, you don't have to pay tax on because it has gone to that file. This is one way you can save. This is one of the provisions that salary has to offer, and you can save tax with that. Next, we have something that says employer, when he gives the employee a gift less than 5,000 rupees is exempt, but any gift more than 5,000 rupees, it will get taxed. What do I mean by this? Now, I am an employer and I am gifting something to my employee. If it is more than 5,000 rupees, then he has to pay tax on it. But if it is less than 5,000 rupees, then that becomes an exempt income for him because he can show it as gift from employer. I'll tell you what is the catch in this. Most people would be getting something as a Diwali bonus or some gift from their employer, and they would have included that in their salaried income. Why? If you can take that as a gift from employer and keep that less than 5,000 rupees, then that entire amount you take as a deduction, you take as a exemption. That is how you can work with salary. Next, we have something with business. Now you have a business and you buy a car. Tell me, do you see a connection between that? We can have a connection. The connection is if you are using that car for commuting to your business or utilizing it in your business, or you have it as a source of marketing for yourself, for your business, then all of those times you can take that car as a business asset. What is the advantage if I have it as a business asset? When you have the car as your business asset, you can claim depreciation. Depreciation. So what is depreciation? Income tax allows you to take 15% of the value of the car as depreciation. So imagine I bought a car for 20 lakh rupees, took it as a business asset. Then for the first year, it would have depreciated 15%, next year 15% of that value, and the third year 15% of that value, which means approximately 40% value of the car is reduced. Now, the value of the car is only 60%, and at the end of 3 years, if you sell that car, mostly it will go for the same amount or sometimes even higher than that. So you have used the car for 3 years and you have also taken the depreciation for it. So whatever depreciation you have taken, it has increased your business expense, which means it has decreased the profits of the business and decreased the income tax, correct? You should agree with this, because if your profits reduce, then your income reduces, which means your income tax also reduces. Now, so it is always better to have more depreciation by which you pay less income tax. It's inversely proportional. Coming to another part, mobile phones. Now I have a business, and of course I will use my phone in my business, correct? So I can take this phone into my business account and call it as a business asset. Now, even for this phone, I can take a depreciation. So what are the assets that you use in your business? Most of the times you tend to miss out on putting that in your, you tend to miss out on putting it in your business, stating it as a business asset. But there is a lot of advantage when you state it as a business asset, because you get depreciation. So check it out, look into your business, see if there is an asset that you have, but you're not claiming depreciation on it because you have not taken it as a business asset. Now, what is the advantage of having these business assets with you? The advantages you have are the expenses that you incur towards it that you can take as business expense. So what do I mean by this? Now, because the car is my business asset, the fuel I use for the car, the repairs and maintenance for the car, the insurance for the car, all of this will also be a part of my business expense. And for all that money that I'm spending towards the car, I am reducing that income of the business, by which my income tax is also reduced. Similarly with the phone, the insurance you take on the phone, the repairs you incur on the phone, all of that will again come as the reduction in your reduction of your profit of the business. So now, most of the times what happens, your friends might come to you and ask, you have a business, right? Take my phone also as your business asset. Doing that, a lot of people tend to include so many assets which are not actually theirs. That might become tricky, that might become difficult. So it's always better to take those assets which you're using on a daily basis, which is yours, and you are using it for the purpose of the business. Then take that as a business asset, claim depreciation on it, claim the expenses you incur towards it. And because of that, you are utilizing it for your business and also saving money on that, which means you're saving tax. So this is about our business segment. Now, rental property. Rental property, many of our elder generations prefer to get income from rental properties. Why? Because it has to do something with the money involved. The money you receive as a rental income, 30% of that money, irrespective of how much it is, even if it is 1 lakh or it is 10 lakh, 30% of the money I receive as rental income, that gets a standard deduction. So which means only 70% of the rental income that I'm receiving will be subject to tax. Rental income has two advantages. One was this. Second one is when you have a house property. Suppose you are planning to buy a house. You can take a housing loan, right? But why should you take a housing loan? Yes, I'll tell you why you should take a housing loan. Because the interest you will pay on that housing loan, you can claim a deduction for it. How do you do that? So if the property is for yourself, if you're buying a property for yourself, then only up to 2 lakh rupees is the amount you can take as deduction, which is the interest on housing loan. But if it is for a rental property of yours, you can take the amount you pay as the interest on the housing loan, you can take the entire amount as a deduction. So housing loan, we have understood advantages of the housing loan. Now, housing loan we have understood. Now let's take up another few scenarios. What are they? Let's understand these other sources. You remember there was one head called as other sources. Let's talk about that head. So people get married. When they get married, they receive a lot of gifts. All the gifts that they receive in their marriage, income tax said, I don't want to take the headache of knowing what they are and applying tax rates on them. So income tax said, whatever gift you get in your marriage, I give you exemption. If you're getting a gift in your marriage, I won't tax it. So it's always a smart strategy to have transfer of assets, transfer of those things that you want to transfer during a marriage, because all of them get exempted. That's about marriage. But what if it's your anniversary and you got a gift which is more than 50,000 rupees? So here what we have to understand is any gift more than 50,000 rupees, if you are receiving, will get taxed. Any gift that is more than 50,000 rupees will get taxed. But not in the case if it is a marriage, not if their person is your relative. Relative does not mean ये सारे हमारे रिश्तेदार हैं. They are not your relatives. According to income tax, they are not your relatives. According to income tax, relatives are your parents and their parents and their generation, your kids and their generation, your wife, your spouse, their brothers, your parents' brothers, And there is a particular ambit which says, which talks about relationships, and these people get called as relatives. Now, if you are receiving any gift from these relatives, then you pay no tax. So, give you an example. My grandfather gives me 1 crore rupees. Do I pay any tax on it? No. I'll give you a very funny scenario to understand this. Now, there is a boy and a girl who get engaged. And the boy's mother decides to gift the girl jewelry. And the jewelry is worth 1 lakh rupees. So when she gifts it to her in the engagement, they are not relatives, right? And it is not marriage. So when just because she is receiving that jewelry, she will have to pay tax on it. And 30% of that jewelry, she will be paying tax only for receiving that jewelry. Now imagine if she had given in a few more days, they both got married. When they got married, if she would have gifted it to her, then no tax, right or not? So this is how practically income tax works. And most of the people not realizing these few things that happen in income tax, they end up paying tax. They end up paying tax for transferring some gold, any asset from them to their another family. Most of the times this happens. So if you have thought of all your friends put together to give a gift to your friend, prefer giving it on his marriage, because again, what gift you take as in your marriage is exempted. We understood marriage, we understood relative. Now there are two of these items that income tax has left in this ambit. What are they? Motor car and watch. So if you are gifting a car to anybody who is a non-relative, the person who is receiving it, does not pay tax on it. Similarly, with a watch, if you are gifting a watch to anyone, no matter how costly it is, the person who is receiving it does not pay tax on it. These are the two items that is excluded from that ambit. Then, after understanding about this, we go to interest and late fee. So, all of you have your income tax return, right? Please take it up. Have your income tax return. So try to look for what I'm telling you. Look for number 5. Serial number 5. What does it say? Interest and fee payable. Does it have an amount next to it? Yes, which means there is some default or some mistake you are doing because of which you are paying that fees or that penalty, right? Let's understand why this happens and how you can avoid doing it in future. Sometimes even I end up taking that expense, taking that late fee, but it's always better if you know how it works and how next time you cannot make it. Because this fee or penalty that you're paying, you don't have any benefit. You are just incurring a mistake, and most of the people I have seen have incurred it from so long and they don't mind paying that late fee, paying that penalty. Let's understand, what is this penalty? Why does it occur? So this penalty or late fee can happen in 2 scenarios. One, if you do not furnish your return of income. What is return of income? Return of income is something that you file to the government stating your income, and when that return of income you have filed to the government has seen it and they approve it. When they give it back to you, it is called your income tax return acknowledgement. That is what all of you are having with you, ITR acknowledgement. So ITR acknowledgement is what the government has acknowledged that this is your income and this is the tax you have paid. We agree to it. So first is furnishing your return of income. When you furnish your return of income, you have a certain due date. What is the due date? Depending upon what person, is it a company or a person, you have a due date for yourself. And if you don't file your return of income within that due date, you pay a late fees of 5,000 to 10,000 rupees. To avoid paying this late fee, know your due date and file your return of income within that due date. So with that due date also comes a penalty. What is the penalty? If you delay in filing your return of income, you might actually spend 1%, you might actually spend some money as penalty on because you have delayed on filing that return. Now, because of COVID-19, that we have got a few extension dates from our government, which means our due date for filing return has been extended to 30th November. Now, what you have to do as a good practice is know when the due date is for filing your return of income and file it well before time. Don't go to the last moment and say, pressure your chartered accountant. Why? Where is my tax? Where is it not filed? A lot of confusion happens. So make it a good practice to do it well before time and file your return of income well before time. Then after this, we have advance tax. This is the second reason why a lot of people end up paying late fees and penalties. So what is advance tax? Advance tax is a concept which is developed from last year. What tax I have paid, I will, by keeping that as a basis, I will estimate my present year's tax. And after I've estimated my present year's tax, I will pay it on a quarterly basis to the government. Now, what mistakes do people do in this? There is a due date for every quarter in which they have to deposit certain percentage of the advance tax. One, they don't pay the advance tax on time. Two, they pay inadequate, which is shorter than the advance tax they are supposed to pay. So, a lot of people make wrong calculation when it comes to calculation of advance tax. So it's always better you pay a little extra because if you pay shortage, if you pay less, you will get tax, you will pay fees and you will pay penalties. But if you pay more, they won't keep that money for themselves. They will give you an income tax refund. So always calculate your advance tax well before in time and pay it well before in time, which will give you the advantage of not paying all this late fees and all this interest, all this late fees and penalties that will go in. What you also should know is what interest you are paying for this advance tax shortage is 1% per month, which means 12% interest you are paying. Even if you're holding up whatever amount, you are paying 12% on it. So calculate your advance tax properly. Once you have calculated it, make sure, get it reference from a few people and then pay it well in advance. I hope all of you have understood this. Here, we have understood a brief run through gross total income. You have understood the Chapter 6A deductions. Then you know that is total income. That total income comes in the slab rates. Then you know the late fee or penalty you are paying, and you know about the tax you're paying. I hope this session has been beneficial to you. You have learned a lot about taxes. You are going to implement all of this for yourself, and you have enjoyed with me. Thank you so much. Lots of gratitude to you. Lots of love. Thank you for being a part of this session. Thank you all those people who have played a part in making this session what it is. I want to disclose to you why I thought about this seminar, how this got initiated. So all those times I've thought about this COVID-19 situation, Corona situation, I have thought I want a few more people to know that about what bad is happening out there and how I can contribute from my side. PM Cares Fund is a place where a lot of people are donating and a lot of good is happening out there. A lot of COVID-19 patients are being treated and a lot of good things are happening because of that fund. Now, I wanted to reach out to more people. I wanted to tell them, please take part in your country's fight. Please play your part. See, it does not matter even if it is 1 rupee. You have donated something and it is being used for something good. You are helping your country come out of a crisis. This is the time your country needs you. So I have taken up this opportunity. I have taken up this seminar to add value to all of you, and also so that we as the citizens of India can play our part in our country fighting COVID-19 crisis. So please guys, this is my personal request to you. If you have learned something from this session, if this session has added value to you, if you know this session is going to save you a lot of taxes, then please contribute 99 rupees to PM Care Fund and send that screenshot to me so that I know I have played a part in fighting the situation. We as a team, we as all of us in India, all of those people who have been a part of this seminar, we have taken a step, no matter how small it is, towards fighting the situation. So please donate 99 rupees from your side and send us the screenshot, and we will collate it, and we will know, so that I will know how many people were there, how many people have donated, and we would have contributed to our nation. Thank you so much, everyone, for being a part of this session. It has been an amazing time with all of you. Let's take a small 5 minutes break, and we will be back with our Q&A, question and answers. I will leave the chat box open to you. Please poll in all your questions. You can raise your hand. We will unmute you, and you can speak to us. All this time, I have been speaking to a camera, so I know it's been frustrating. Please raise your hand. Let me hear a few voices. Let me hear what you have to say, and we will clear. Let's have brainstorming. Let me clear your doubts, and we can end on this beautiful note. Remember, we are on TaX. We will take a small 5 minutes break. See you all. Thank you. Welcome back. We are on TaX and we have learned to save tax. We're happy to take up questions now. You have an option to raise your hand. So when you raise your hand, I can unmute you and we can take up the question.
How you listen to them? You can't listen to them. Your voice will be echo. Otherwise, you have to keep quiet. You have to let them talk.
One second.
Pooja S. Pooja S. Can you please
Pooja S, you can please unmute yourself. Pooja S, I see your hand raised. You can unmute yourself.
We can't hear you.
You can keep posting on the chat box. We will take up the questions from there too. Are there no questions? We have questions.
3 raised hands. Pravesh, please unmute.
Pravesh, you can unmute yourself. Pravesh, can you hear me? Pravesh,
Sir.
can you hear me? Pravesh,
Sir.
can you hear me? One second. Yeah, Pravesh, tell me.
Sir, please give us a quick recap of all those we talked today,
What?
sir.
Could you please repeat
Sir,
that?
please give us a quick recap of all those you teach now, sir.
Quick recap of
What you teach. That won't be possible.
Yes, sir. What you teach now?
Yeah, if you can tell me which part, I will be able to help you with that. Pravesh. Pravesh, are you there?
Yes, sir. I am there. Salary.
Yeah.
How to save salary, sir?
Sorry?
Salary.
Salary. Salary. So, are you talking about the 50,000 salary that I told? If yes, you can just put a thumbs up. I'll start.
Yeah, of course.
Yeah. So, regarding salary, I'll give you an example and then make you understand. So, if I'm earning an income of 6 lakh rupees in my entire year, then the entire 6 lakh I will not show in my gross total income. That 6 lakh I will reduce 50,000 because this 50,000 is a standard deduction that every employee will get for the salary he receives. So even if he receives salary of only 50,000 or he receives a salary of 10 lakh rupees, 50,000 is common for everyone. So if you are receiving any salary, make sure you are deducting that 50,000 and then subjecting that money to your gross total income. That 50,000 you will reduce in the head salary. So in your income tax return, when you have the salary head, in that you will reduce your 50,000 and then only take the amount to your gross total income. I hope I've cleared your doubt. Anybody else, you can post your question in the chat box.
There is one more hand. Kalpana.
Yeah, I see one more hand.
Kalpana. Can you please unmute yourself?
Kalpana, can you please unmute yourself?
Speak now.
Kalpana, Miss Kalpana. Is there any other questions you guys have? Chat box is open. You can unmute yourself.
Can you again explain buying a car, Ranjita?
buying a car.
Ranjita mentioned.
Ranjita. So regarding buying a car, so when you have a business and if you're using a car for any of these purposes, what are those purposes? Either you are traveling to your business with it, or you are using it for your business. That car is, you are using it on a daily basis in your business, or you are using that car for your marketing purpose. What do I mean by marketing purpose? When my company poster is there on the car and that car that is contributing to bring me revenue to my organization, to bring me revenue to my business, then I can call it as a marketing expense, and I can call it the reason of marketing and keep that as a business asset in my business. So what is the advantage of having depreciate? What is the advantage of having that car in my business asset is the depreciation I get for the car. As I gave you the example of 15% depreciation every year, which means at the end of 3 years, you would have got close to 40% of the value of the car as depreciation. I think you've got my point. So when your business expenses increase, means your business profit has reduced. And when your profit has reduced, the business income has reduced, which means the tax you pay will also reduce. Am I making sense? So you will see most of the people who will change their car every 3 years. Why do they do that? Because when they take a new car, that 15% value will be more. So already if 3 years I have depreciated it, and then that 15% will be less. But if it's a new car, the new amount, 15%, will usually be more. With that reason, people keep changing their cars once in 3 years because they keep getting more and more depreciation. Am I clear?
Yeah, got it.
I see
Yeah,
your.
got it. Thank you.
Okay, you're welcome.
Okay.
Yes, I see your question.
What if I'm gifting someone a bike on some occasions? How will I portray that in a funds?
So, whenever it is
Read the question.
Okay,
please.
let me give you the question. The question says, one second.
Yes.
One second, Josh. I'm just reading out your question. What if I am gifting someone a bike on some occasion? How will I portray that in my returns? So, whenever anything has to do with gift, always remember the person who is receiving that gift is the person who has to think about tax, not you. Because when you are buying something, when you are buying a bike, you would have already paid tax on that money from which you are buying the bike. So you don't have any tax implications. The person who is receiving that bike has the tax implication. Right? Are you getting my point? Similarly, I'll give you one more example. You wake up from your bed, it's your birthday, and you see there is a iPhone 11 Max Pro sitting in front of you. And if I tell you that gift is from a non-relative, would you touch it? Think before touching it, because you will pay 30% for accepting that gift. So unless it is a marriage, unless it is from your relative, the gift that you receive, you will be paying tax. So whoever you are gifting, that it matters that are you a relative or is it a non-relative? And that occasion, unless it is marriage, in marriage everything is exempt, but any other occasion other than marriage, that exemption is not there. Right? Is that clear? Have I answered your point?
Okay, the next question. Sanjita DS.
Sanjita DS. Does the tax liability of an individual get affected due to his residential status? Yes, very much. So, according to income tax, we have 3 kinds of diversifications. If you are based on how many days you stay in India. So, if you are staying, there are certain conditions for that. I'll tell you what those conditions are. So, if you are staying for more than that many days in India, you are called as a resident in India. And then there is another few cases and scenarios. If you are staying so many days in India, you are called a resident, but not ordinary resident. And there is another set of people who are known as non-residents. So there are certain tax provisions which will apply to residents, resident but not ordinary resident, and non-residents. I know others might find this as gibberish. You might not be able to understand this. When you get into tax, technically, you will come across these terms. So yes, definitely your residential status will determine a few tax. Does not mean everything about tax will change. No, a few sections of tax might not apply to you. A few sections might apply to you. So there are certain sections that apply to resident and ordinary resident. Some that apply to resident but not ordinary resident. So yes, your question, the answer to your question is residential status does matter.
Again, now, first question.
Ranjita, can you explain the rental property? So, what do you mean by rental property? Rental property is when, the property in which you are living in is known as self-occupied property, and the property which you have given on rent and you are receiving rental income, you call it as a rental property. I hope this much is very clear. The rental property is generating your rental income, correct? That rental income which I'm receiving, I will reduce that rental income by 30% because of the standard deduction available to me. So any rental income that I receive, 30% of it is a standard deduction. I will take it out, and then that remaining 70% will only come in my head, the heads of income, which is house property. Before you put it, when you're taking that amount there, you can take out 30% of it with the name standard deduction. So that's about the rental property and the income you're earning from that rental property. Sonali. Sir, gold was converted in tax. I'm sorry, I didn't get your question. Sir, gold was converted in tax. Eppadi converted Pananga, sir. I know a little bit of Tamil, but if you can please explain it to me a little bit more elaborate, I can help you with it. Pravesh. Business asset depreciation is deducted from income, sir. It decreases the income tax of business. How it benefits me as a citizen, and even I have to pay tax, sir. Business asset depreciation is deducted from the income, sir. Now, understand this. You are the owner of the business, correct? Which means whatever profit the business is showing, that profit will get reflected in the head, business and profession. Wait, let me make it clear. First, I told you about the 5 heads of income that is available, and every kind of income has to come under one of the heads. So the income that you will earn from the business will be coming in your business and profession head. I hope this much is clear. In that business and profession head, if you had not taken the depreciation, the amount would have been more. Now, because you are showing a depreciation, your expenses have increased. You know the logic of profit, right? Income minus expense is profit. So if you are increasing your expense, your profit has reduced. Your profit has reduced, then the amount coming in your business and profession head has also reduced, which means your gross total income is also reduced and your income tax is also reduced. There's a lot of dots to join, but this is how it works. So ultimately, the goal is with more depreciation, you reduce income tax. Correct? Are there any ways to save tax on interest I have earned on loans I have given, with and without collateral both? So, Piyush Ramka, so here when we say collateral, if there is a collateral, you call it a secured loan. And if it does not have a collateral, it's called an unsecured loan. Now, any ways to save tax on interest I have earned on these loans? To save tax on the interest I have earned, interest you will earn on this will come in your other sources head, and you cannot avoid it. That will come in that particular income that you're talking about will come under income from other sources, and it will form a part of your gross total income. So directly there is no provision to reduce that amount or to reduce the taxability of that amount. What you can do is, when you and your friend, you have given an unsecured loan. For that, you are receiving interest, correct? That interest is your expense. And when he has, in his file, he is paying that interest to you. When he's paying that interest to you, that interest expense for him, that interest is an expense for him, which means he is reducing his profitability. He is reducing his profitability, so his tax reduces. But because you are receiving that income, you have to pay tax on that income. So this is how you play. He is not paying tax on that expense part, but because you are receiving that income, you are subject to pay tax on it. That is how unsecured loans and the interest you earn on loans, that's how they work. In direct provisions, you cannot, there is no particular deduction that will let you take away that interest. It has to come in your income from other sources and will come in your gross total income.
Time up, 2 more minutes, last 2 questions.
Can a person fill a NRI in an income tax form if he has been out of India for 6 months, though he is Indian citizen? So this is a very valid question, and this is what most people get confused with. Residential status has nothing to do with if the person is Indian citizen or not. Most of the time, people say NRI. NRI in terms of general understanding is different, and NRI in terms of tax is different. So I'll tell you how this works. If you have stayed for more than 182 days in India, and then there are a few more provisions to it that you should have stayed so many days in the previous year and all of that, then you qualify to become a resident. Or else you are a non-resident, or a resident but not ordinary resident. Now, what was your question about? Your question was about, can a person fill an NRI in an income tax form if he has been out of India for more than 6 months, though he is an Indian citizen? Fill an NRI income tax form. I didn't understand NRI form. So you're telling in the income tax form, you will claim yourself as a non-resident. So here again, what will matter is how many days you have stayed in the previous year. So there is a condition that if you have stayed for more than 730 days in the last 3 years, so there is a computation that goes into it. You can let me know if it is a personal case, because I see more questions. You ping me the question, you ping me the number of days. So I will be able to help you that this is the scenario. Are you a resident or non-resident? Are you a resident but not ordinary resident? And then we will be able to fill it in your income tax form.
WhatsApp.
You have my personal number, so you can send it over there, and I'll be happy to clarify. We have Mridul. Are there any benefits to file tax early? What if I file after the deadline? Filing your return of income tax early has no benefit. It means you are a good taxpayer. That's one thing. The second thing, if you file after a deadline. So suppose this year, let's take the example of this year. This year, the deadline is 30th November. Because of the COVID-19, we have got an extension. So 30th November is the deadline for 30th November is the deadline. Now, what if I pay post 30th November? If I pay beyond this due date, I pay 5,000 rupees as late fees. And then if I am filing my return after 31st December, then I will pay 10,000 rupees as late fees. These are the two types of late fees: 5,000 rupees, 10,000 rupees. Before 31st December is 5,000, and post 31st December it is 10,000. That's about when you delay filing your return of income. Yes?
You're done. Go ahead, please.
Sir, once again the answer 80 CCD1B. CCD1B is NPS. Sir, once again the answer 80 CCD1B. The answer to 80 CCD1B is National Pension Scheme. National Pension Scheme is like how you put money in your savings bank account or your FD. That is how you can also put money in National Pension Scheme. So when you put money in your National Pension Scheme, it will keep earning interest for you at 12 to 14%. and that money you can only withdraw when you're 60 years old. Before that, if you have to withdraw, it can occur only in certain places where you have a serious injury or any of those certain cases that are stated, but it is meant to be withdrawn only after 60 years, and that's about NPS. And the limit of NPS, some people get confused that that limit is included in 80C, but no. 80C is 1,50,000 rupees, and 80 CCD1B of NPS is an additional 50,000 rupees after this 1.5 lakh, which means you can claim 80C also and 80 CCD1B also. So together, 80C plus CCD1B is 1,50,000 plus 50,000, 2 lakh. Have I made this clear?
Explain 50K, sir.
Explain 50K. 50K here, like how 80C has a maximum amount of 1,50,000 allowed as deduction. 50,000 is the maximum amount 80 CCD1B allows, which means if I am investing 40,000 rupees in NPS, I get 40,000 as deduction. If I invest 50,000, I get 50,000 as deduction. But if I'm investing 60,000 as in my NPS, I still get 50,000, which means the maximum deduction I get for NPS is only 50,000 rupees for that particular year. Next year you invest again, next year again 50,000. So that is how this 50,000 maximum limit works for NPS, right? Am I clear? I think it's 6:33. 6:33. I've had an amazing session answering to all your questions. I'll be happy to answer all your questions. We can take it up personally. We can have another session for Q&A. Please feel free to drop your messages, drop what you felt like. You have my contact number. If you don't, take it again. That's my number. If you have my Facebook ID, Instagram ID, you can drop in your messages there, drop in what you felt like. I want to know, I want to hear from you. All this time I've been talking to a camera. Please let me know how you felt. Please tell me this was good. I think you should have given more clarity about this. Let me know what you felt. Let me know how the session was. Any of your queries, I'm free to answer. Please let me know. Thank you so much for being a part. And don't forget, contribute 99 rupees to PM Care Fund. Let me remind you, the contribution you make to PM Cares Fund, the amount that you contribute to PM Cares Fund, you get it as a deduction. I'm sure you remember that, Section 80G, which gives you a deduction for contributing to these funds. Please, 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 make sure you do the contribution. Send us the screenshot, and I will see you in our next session. Whenever I meet you, thank you so much for being a part. Thank you for having this. Thank you for being a part. Give some thumbs up. Let's meet whenever possible. We are on TaX. Thank you so much. Bye-bye.